Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, September 2nd. Well, as we all know, we did talked about pre-market weakness in yesterday's video, and sure enough, we did get a big gap down yesterday, and they really kind of pushed them into the close pretty hard, with really some intense selling picking up right around 350 and going right into 4 o'clock. Pushed them pretty much at the lows, and then all of a sudden we get a little bit of a bounce. Again, it's all about this China news. Now, is this kind of an over-exaggeration? You know, if I thought that a lot of these commodities were at their highs, I would say no. Then there's a lot more selling left. I mean, but the commodity sector, whether it be the soft grains, the hard metals, or again crude oil, they've all been slashed in half to three-quarters during the course of the year. You know, and they continue to get battered. I mean, they really just continue to get beaten up. So I think it might be a little bit of an overkill. However, again, China is a big purchaser of our commodities, and they just buy everything across the board. So, you know, you can't just deny that. We've been talking about this for the last year and a half. So we get a gap down today. Our indicators are still not in washout territory again, so that means that we could really have plenty of room to test these lows here. And that's going to be last Monday's low is going to be pretty much key and pivotal. So we lose that, I think we're going to see some really nasty selling come in. But we could even easily test this and then double bottom and start to roll back up again. We do have a gap area here. Okay, this gap area needs to be filled and eventually will be. We don't know when, but it will be. Last night, China intervened with their yen and we were sending all of equities, U.S. futures, equity futures higher, and we are up about 11.5 handles in the pre-market in the ES electronic contract. So could that be some stabilization? Could we see maybe China speak up their markets as well? They're trying to do everything that they can in their power to try to stabilize their markets, and really hasn't been working. So it's really anybody's guess here, guys. The best thing to do is not to take in any overnight risk. Reduce your share size until we get a handle on what we're doing. Obviously, we are correcting, and we just need to know how long this correction is going to be. All right, now we're up today. If we lose today's gains, pre-market gains, and we start to sell off yet again, then I would say be very cautious. I would not be looking just yet to start building your buy list. Not yet. It's still a little too early. I still think that there's some more downside to come in the next few weeks, actually. So just keep that in mind. Let's just run through the indexes. Really, nothing has changed other than this bit lower, as you can see here. Yet again, we need to eventually fill this gap. Yesterday's low, we take out that low. I think they're gonna push them down to this area here, at least to the 187.45 in the spiders. Qs holding up a little bit better. Apple got a little bit of an upgrade and then ended up selling off yet again. So let's keep an eye on the big ones, Apple and Netflix, the Googles, and see how they hold up into this selling pressure. Okay. Next is the transports, and again, guys, we've been talking about this for quite some time. How nasty the transports have been. While transport's been selling off, equity markets are moving higher. Eventually, that's going to take hold, and sure enough, it did. And now we actually touched this area here, 136.80, which is this area of support I have marked on the chart, and we touched it right to the penny. We lose that, you're gonna get that last Monday's low, which is gonna come in here. Now, transports are coming into favor. They do come into favor right around late September into late October. They come into a little bit of buying pressure. So let's keep an eye on the transports here, okay, and see what they do as well. Now, I think FedEx even got upgraded yesterday, but you might want to double check that. Russell, another big gauge of risk on, risk off sentiment of the investor, and you can see this is just clearly in a bloodbath. It's just terrible. So this is something that we want to see actually move back up and get back above this zone area, this resistance zone, and start to move back up again. But I think that has a lot of work to do. Bearish symmetry here with lower lows and lower highs. So it also has, as you can see, pretty much of a gap. We're going to need to eventually fill that gap. Okay. Next area will be right around the 110, 111, and then of course this lower last Monday's low of 108.20. Okay. Lastly is going to be the diamonds, which is the Dow Jones ETF. And you can see here just clearly what a big mess. The 20, the 50, the 200, way up above. And it just really took it on the chin yesterday, man. Extreme amount of selling coming in. And you would say, where is all this selling coming from? Well, there's also a very light week too, guys. So just keep that in mind. A lot of the big players will be back next week. Kids are going to school now as we speak and start moving along. So we're hoping to see some volatility subside just a little bit, that we come in and get some more volume and some bids coming into the marketplace. All right. Hope that helps today. Remember, guys, make sure you keep your stops in place. Reduce your share size for now. Let's ride through this volatility. There's plenty of opportunity, by the way. Plenty of opportunity to be had out there, okay? Just got to take it one step at a time. Have a great day, everybody. We'll speak to you tomorrow. Take care.